What's going on, y'all? Welcome to another episode of the Friday Wrap-Up with yours truly, Kevin Weedmark, aka The Mortgage Mouth, and happy Friday to everyone. And just a reminder, the Friday Wrap-Up is where I like to bring just a recap of what happened this week. So as we're heading into the weekend, open houses, talking to clients, whatever it is, we're all beating to the same drum of what happened this past week with interest rates. And also want to give a big shout out anyone that's subscribed to the channel, much appreciated, on YouTube, dropping the daily dose, your fastest 2 minutes, giving you an update of what happened on a daily basis. We also do our weekly update as well, with our Weeds Weekly, and of course we have our Friday wrap up as well. So let's just dive into what happened this past week very quickly. And the main thing that is really driving the markets right now that we're seeing is everything seems to be in a sideways. Everyone understands that tariffs are an issue. There's a lot of uncertainty around the marketplace, right? But the biggest thing that's really driving, it's the traders trying to figure out what's going on, and their main objective, as always, is to think ahead and make money. So what we're seeing is a big shift, right? We're seeing money move constantly, and we're seeing big shifts with sell-offs in the markets. We're seeing treasuries being bought because they're the safe haven. And a lot of it is being driven by data, but not as much. It's not massive, because a few things we saw this week. We saw manufacturing down. That showed a concern for the economy, right? We saw prices up with the services, but then we had GDP. GDP for Q4 came in a little bit better than expected. Initial jobless claims came right in where it was supposed to, but then we also saw consumer confidence. Consumer confidence fell off the face. It was horrible. We were at a 12-year low for forward of where consumers believe the outlook for the economy. But you know what? Traders didn't care. Traders have already built in the fact that we are uncertain about this tariff. So regardless of what we're having the media rhetoric be, and how, wow, things are very uncertain and people aren't doing this and people aren't doing that, what we are seeing is that the traders are saying, whoa, 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 whoa. We really don't know the impact yet. Because even after we had the administration announce that they're going to add those tariffs back in for the automotives, and they're going to do the reciprocal tariffs starting next week, again, the traders didn't really care. The biggest data that they were really focused on this week was PCE, which was inflationary data. That came in hot today. But overriding that, instead of inflation being the biggest concern, it's the overall feeling that inflation is going to drive the consumer back even further with those consumer confidence numbers now. And what that's going to do, it's going to slow the economy down. And slow growth means less wages. And inflation, in that theory, right, the law of economics, inflation will take care of itself. So they're not overly concerned now about inflation. Doesn't become the biggest concern. What becomes the biggest concern is the overall economy, the growth, and our actual stocks going to make money. And the answer to that is they're not really clear on that picture. So what you're seeing then, like today, is a big sell-off. Traders need to put some money somewhere. They're going to go safe. They dump it into treasuries, and what we saw interest rates close the week in a very positive manner. We saw interest rates drop today, depending on what loan program, all the factors. I'm not quoting rates here, but what I'm saying is interest rates across the board typically dropped anywhere from 1/8 to 1/4 today, which was great news overall. So that was kind of the gist of the week. It seems like we are in this sideways holding pattern, waiting for the beginning of the month where we're going to get CPI again, we're going to get non-farm payrolls again, and the overall health of the economy. Like I said, with the Fed talking last week, we're looking at a 67% chance that the first Fed funds rate cut is going to be in June. I'm telling you now, I don't think it's going to be until September. I think we're going to see almost a repeat of what we saw last year, the Fed making their first move in September. So that's where we're at for the week. Again, the beauty of it is, if you're working with the right professional on the mortgage side, or if you have a client that is under contract and heading into the weekend, they need to be working with someone that is talking to them on the daily. Encourage them to make sure that they're talking to their clients, because today could have been a great day to lock. We saw a good price improvement from lenders, and today might have been the day, especially if they have a closing towards the end of next week or the beginning of the following, because you got to meet all the timelines. That might have been a great time to lock. So That's the message. As always, if you need anything over the weekend, a pre-approval, you need some marketing material, you have a question, a client has a question, please do not hesitate to ask. I'm just making sure I didn't lose anything here or forget anything. No, I think that's it. I mean, if you're listening and you're tuning, you subscribe to the channel, you're getting the rhetoric that I'm sending out there on the daily with the daily dose. That's giving you a lot of information so you're really clear and you're prepared for this Friday wrap up. But that's kind of where we're at. The message I'd be sending out: sideways movement. Traders are more concerned about a slowing economy, which is why they're moving money out of the markets and they're moving it into treasuries, which is a good sign for interest rates. All right, y'all, have a great weekend. Alfie, say hi. I'm visiting my daughter out in Cali, so Alfie's my guy. Beautiful beach. Y'all have a good one. As I said, I'm always around. You need anything, you give me a call. Talk to you soon.